What is going on, traders? A few things to go over. It's going to be an absolutely insane week. And so, of course, we got to go over the earnings that's coming up this week. We got Apple, Tesla, Meta, Amazon. We're going to go over all that and more. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So, just a quick recap of the last video because I just did not like the quality of that video. So, I do apologize about that. Hopefully, this one comes out a lot better. And so, right now, we're looking at the NQ daily time frame. And one thing I've always encouraged you guys to do is to not only look at the futures but look at the ETFs as well, because one may be lying to you and one may be telling you the truth. And so why am I saying that? Well, when you look at the NQ daily time frame, remember I'm always talking about that Jerome Powell sell-off zone. And so if we're looking at NQ, we're currently below the Jerome Powell sell-off zone right here. Jerome Powell originally sold off the market, and then you saw this massive downfall across the board. You started to create lower highs, lower lows, so on and so forth. And so when you're looking at the NQ, NQ failed to make new highs. But then when you look at the SPY, right, and this is why I was uneasy and I was warning about being careful around this area. When you look at the SPY, you made new highs on the SPY. But again, you see a sell-off happening after hours, and we're selling off from that Jerome Powell level or that Jerome Powell zone right here. And I've been warning about this over and over. Every time we hit this zone, we see a sell-off. And every time we hit the zone, I warn you guys to be careful here. I wasn't calling for a top or anything. I was just warning to be very much careful here. Why? Because bears are extremely present in this area. So you sold off here, you sold off here, and now given that the market is selling off after hours, I imagine we're going to see some type of gap down in the open at open, right? And so you look at triple Qs, same thing, right? You're just not getting new highs on the triple Qs as well. You look at ES. ES, despite SPY making new highs, ES failed to make new highs, right? And so you got to do the math and you got to put everything together. We got great news for semiconductors last week, and Nvidia didn't even make new highs, right? It just pretty much sold off almost a day or two after the news that it got, right? So you got to pay attention to everything. I know new highs, and it's very nostalgic to see the market go to the upside, but that is how you get trapped. When your eyes get big, when you start drooling at the mouth, when you start getting overly excited, that is how institutions, Wall Street, that's how they trap you. That is the perfect time to trap you when everyone is screaming all-time highs. That's the perfect time to sell off the market. And so that's just a quick recap. Let's get into the earnings plays. Hopefully you guys understand what I was saying from the last video. Hopefully it all makes sense. If it did, let me know in the comments below. Now, when we're looking at earnings, first stock up is Apple because a few of you have been asking about Apple almost like every video. So we're going to go over Apple real quick. So right now, Apple is at its 200-day SMA. I imagine it's probably going to be a little bit lower than that after hours. We'll have to see. But right now, you're looking at a rising wedge pattern. And so if we measure out the intended move or the projected move of this rising wedge pattern, all you would do is start from the open to the close of the rising wedge pattern. Where did it go? Let's try it again. And it doesn't matter what measuring tool you use, guys. Just, go ahead and grab you one. And so all you do is drag that measurement to the breaking point or the original breaking point, and you're looking at a measured move all the way to 170. Now, do I think Apple is heading to 170? I don't know. I can't say for sure. Is Apple the most innovative company to exist? Absolutely not. So, does Apple give good guidance or anything like that? No. It just pretty much tells you the same thing over and over. They sell you the same product over and over. They just tweak it a little bit. So, I mean, is a sell off on Apple to 170 really going to be surprising? No. Now, am I saying this is going to happen for its earnings? Well, let's see. So we do have a few fair value gaps towards the downside. And if you don't know what a fair value gap is, I do encourage you to either Google it or look for my fair value gap video where I go over pretty much what fair value gaps are. And so we look for illiquid areas, right? We're looking for illiquid areas. And so your first illiquid area is around 208, between 208 and 204. Right, so you have an illiquid area here, and so that will be where your fair value gap is, or one of your fair value gaps is. Now, I'm not going to mark out every single one, This is just to give you guys an idea on where Apple can potentially go because these fair value gaps need to be mitigated. Not only do these fair value gaps need to be mitigated, but at some point in time, I do imagine that Apple will want to fill at least one or two gaps to the downside. Now, again, am I saying Apple is going to absolutely sell off for its earnings? I can't tell you that for sure. But what I will say is that to the upside, we are pretty illiquid. We go down to the 4 hour time frame here, and Apple is pretty illiquid towards the upside. You do have a few fair value gaps that need to be mitigated towards the upside as well. And so you have a fair value gap here, and then you have a fair value gap all the way at the 250s, right? So you have majority of fair value gaps to the upside, and then you have two massive fair value gaps towards the downside. So both sides need to be mitigated. Now, despite what I say, right? Despite what I say in regards to the charts, earnings is always a gamble, it's always 50-50. And one thing I will tell you guys, and Discord members know this as well, despite what I see on the charts, I'm always going to follow what the options chain showed me. I'm always going to follow what whales show me. This is why we win majority of our earnings plays in the Discord, because I follow what the whales show me. So I can be bullish on Apple all day or bearish on Apple all day, but if the whales decide to do something opposite come earnings day, then I'm going to do exactly what the whales do, right? So we are at the 200-day SMA, and historically, Apple pretty much bounces off the 200-day SMA. And even when it gets below its 200-day SMA, it doesn't last too long. Keep in mind, this is the 4 hour time frame. Well, right here, you lasted pretty long. But regardless, Apple does have a history of somewhat bouncing off its 200-day SMA or teasing a little bit below it before heading higher. Now, again, Apple is not the most innovative company. We know that, but it is still the number one Mag 7 stock. And so my thought process in regards to Apple is that I do think we're going to see a move. If the market continues to sell off, we could see a move towards 206. If we get to 206, 208 range, then I do think Apple is going to liquidate or not liquidate the upside a little bit more, and then we could see a retest back towards the upside. So if we go to the daily time frame here, and this is what I look for when it comes to earnings, right? I look for trends that's never been retested. So we go to the daily time frame, and as you guys can see right here, we retested this trend already. So we zoom in. Let's get a better look here. So you broke below it and you retested, but you are leaving again. You're leaving a lot of fair value gaps all the way into 240s. You even have gaps all the way towards 255. So Apple can very much pretty much mitigate this area before seeing a move towards the downside. Now, me, I'm pretty much bearish on the market come February. I'm not saying it's going to be bearish right away, but I do think Apple is going to at least see one more pump, I imagine, for its earnings before seeing some type of sell off. All right, so very much possible. We'll have to wait and see. So that's what I got for Apple. Let's look at Meta. And so hopefully you guys are going to see the same pattern across the board. You're going to see these rising wedge patterns across the board. And so when we're talking about Meta, assuming that the market continues to sell off, Meta is just not looking good right now if we're going to break below this rising wedge. And so your key level here is 610. If Meta breaks below 610, there's a good chance that you're heading towards the 500s. Now, I'm not saying exactly 500, so I don't want to, put that in you guys' head, but I do imagine that Meta is going to want to retest this 200-day SMA. So I'm not too optimistic for Meta earnings. I think it made a lot of its move prior to its earnings. I mean, look at this, guys. You've just been pumping nonstop for Meta, right? So I do think Meta is going to sell off sometime around its earnings, and I could be wrong. Earnings is a gamble here. Always do your due diligence, and again, I'm always going to do what the whales tell me. But if Meta breaks below 610, I do think Meta is pretty much cooked for its earnings, and then you're going to see a retest, a potential retest for its 200-day SMA. I mean, you go back here. I mean, look how long it's been since we retested the 200-day SMA for Meta. I mean, this is the daily time frame, by the way. You do the math here. So I do think that this rising wedge pattern is a sign that Meta is going to sell off and head towards the 200-day SMA at around 550, 540. That's pretty much what I got for Meta. Now, if Meta decides to pump for its earnings, let's say it pumps all the way to the top of this rising wedge at around 680, 670, highest maybe 700, then I do imagine it's going to roll over and then sell off from that point on. Considering that I am pretty bearish for the month of February already, just based off what I'm seeing on the options chain lately. And so we look at Tesla. Now, Tesla, believe it or not, I'm a little more bullish for Tesla earnings. Now, Tesla has a history of just having, trash earnings. And really, the market only cares about, or institutions only care about what Elon says at this point. So, what I will say in regards to Tesla is that it could retest 360 prior to its earnings. That's the ideal move right there. And then we see a move back towards the upside and possibly see that move towards 500. I think Tesla's due for a good earnings. I do. All right. So I do think Tesla is going to retest these guys right here. That's what I'm hoping for. The market doesn't care about what I've hoped for, but if we do see a sell-off right now after hours, Tesla is below 400. If we do continue to see the sell-off and Tesla just so happens to hit 360 before its earnings, I do think that's going to leave a lot of a liquid upside for Tesla, and we could see a possible retest of this falling wedge because the measured move for this falling wedge I don't think has played out yet. Let's actually measure the open and close for this. So we measure the open and close, we drag it to the breaking point, and yeah, you're looking at a move towards 470, 460 range on Tesla. So I definitely would not be surprised if Tesla is probably the only one that really does good for its earnings. I do think there's hope for Apple. It's just really tough to say. In regards to Apple having the same earnings as Amazon or the same day as Amazon, and this is what leads me to Amazon here. Amazon is very overextended. You look at the RSI on Amazon, and it's very overextended. I meant to have my RSI up, but it's gone. So yeah. But again, you're looking at this massive, massive rising wedge pattern, and I think Amazon, and this is what I want you guys to pay attention to or really think about last week. We saw the SPY make new highs. We saw the triple Qs pump. We saw the Dow Jones pump, right? But Amazon stayed at 235 the whole time. Amazon just stayed at 235 the whole time, guys. And so, I mean, you're looking at this, and Amazon has just pumping and pumping and pumping and pumping, right? I think Amazon can potentially, I think the market is pricing in not only the deep, Seek news or whatever, the China news that we got, but I think the market is potentially going to start pricing in these bad earnings. I could be wrong. I could be wrong, but when I'm looking at these rising wedge patterns and I'm looking at the SPY retesting the top of this rising channel, but then you're seeing the mark, or not the top, the bottom of this rising channel, but then you're seeing the rest of the market sell off, and the SPY is selling off at these Jerome Powell levels. I think we're pricing in bad earnings. I do. I think that's the case here because we're seeing these rising wedges across the board, right? So maybe we get more and more pumped. The only stock that I'm really leaning towards, a little bit bullish here is Tesla. Honestly, if Tesla sees, okay, I'll take that back. If Tesla sees 360 before its earnings, I'm leaning bullish. If it doesn't see 360, then it's kind of in limbo, and I'm just gonna wait on to see what the whales are doing in regards to the options chain, right? So that's what I'm looking at for Tesla. That's what I'm looking at for Meta. I think Meta is due to retest its 200-day SMA. It has not retested it in so long. I'm not saying Meta is just going to drop all the way from 650 all the way down to 550. I mean, I guess that's possible, given how bad its earnings could be. But yeah, that's what I'm looking at for these stocks. I think Amazon it's overextended, like extremely overextended. You're very illiquid towards the downside here. Very illiquid. You got tons of fair value gaps towards the downside, leading all the way to about 220 on Amazon. I mean, you got to do the math here. And so we can look at the weekly chart. Let's make sure I'm not missing anything on the weekly chart. Yeah, you have a fair value gap at around the 220s on Amazon. So it's only a matter of time. And then 200 right here. So this is what I'm looking for. This is what I will be looking for right here. What is happening? Here we go. So right here, we never retested this. Did we retest it? Let me go to the daily time frame and double check. Yeah, so we broke out of here. We gapped down and we just broke out again. We never retested this. So 207 is very much on the table for Amazon here. We just have limited space to the upside when it comes to this rising wedge. Now, if the market decides to melt up, sure. But right now, it's just not looking good. And so another thing I was talking about in the Discord, and I was honestly joking with this, but Tesla. So I made a joke here. I said I know what I'm doing for Tesla earnings. And so Wells have 750 calls for March 21st on Tesla. Now, I didn't check if they were still in this position. I'm going to check tomorrow. If you want to see my thoughts on this, come tomorrow. Then I join the Discord. Discord link will be in the description below. But yeah, I was just making a joke here. I'm not actually going to jump into this unless I see that whales are very much still in this. I think it's a safe play. It's probably really, really cheap, if anything. But yeah, this is another reason why I'm leaning towards the bullish side in regards to Tesla. But the fact that Amazon is very overextended here and it has the same earnings day as Apple here, it just doesn't make me comfortable in regards to earnings. I will say that much. Can Amazon, just have a Ivy crush moment? Sure, but even the Dow Jones is very overextended. And so, I mean, I guess we can lean bullish on Apple, but it's really tough to say. Really tough to say considering how illiquid the upside is, but then you have these massive fair value gaps towards the downside. And just based off the history of Apple, it's just not innovative enough. And so that's all I have for this video. Let me know what you guys think. Um, Hopefully the video quality is much better. Again, if you agree, let me know. If you disagree, let me know. Just keep it respectful as always. Until the next video, traders, have a good one.